This is our special edition on Budget Unlocked. Up next, we're going to be discussing all about what the Nifty Bulls expect from the upcoming union budget. And to discuss this, we have a very special guest joining us on the program, Mr. Arvind Sanger, Managing Partner at Geosphere Capital, is with us on this show. Warm welcome to you, Arvind, and thank you so much for taking the time out. I think that's the big question that everybody is asking from the upcoming budget, but I want to understand from you. You've seen so many budgets and in sync with the markets. Do you think this time around a lot hinges on what the budget document could contain? Are the markets really leaning onto the budget to revive spirits back?
I think it becomes more important than most normal budgets. In the past, our assumption has been the budget is largely a non-event, and the best thing that the government can do is do no harm. I think this time, with any big surprises, this time I think there needs to be a little bit more way to revive this private sector and the consumer, because I think that clearly it has become too dependent on government infrastructure spending, and the private sector has not followed through in terms of capex, and the consumer is clearly struggling. Both rural and now even urban. So I think that the government will have to take some bold steps, and if that means, in my opinion, some tax cuts, some other incentives to revive spirits, even if that means a little bit widening of the deficit, I think growth is important. Pro-growth budget is very important, although I have to commend the government for having been very disciplined on the fiscal deficit front. But at this point, maybe the expectation should be that growth will make up for any, mathematical shortfall that may appear from being a little more bold in terms of incentives.
Very important point right there. The markets would be happier if it is a pro-growth budget, even if it comes at a tad bit cost of widening of the fiscal deficit. But we do need boosting of the consumption as well as private capex to kickstart its cycle right now, right here. Okay, but I want to understand from you, Arvind, how are your foreign friends really looking at India at this point in time? I know you have seen this entire exodus that has taken place, the FIIs that have pulled out all the money, at least from the secondary markets per se. Do you think, are they looking at any announcement that would interest them to come back to India at all?
Well, let's be clear. What are the mega trends going on globally? The mega trend going on globally right now is AI. Is India a winner or loser? Right now, it looks like India is on the outs, and it could potentially be a loser, especially because if you look at everything that is going on with using AI for programming, that could be harmful for IT service companies at the low end, the mass market, because there will be less programming, outsourcing needed for the low-level programming. So there's one AI trend that is hurting. The other thing is President Trump has talked about reviving animal spirits in the U.S. even further than what it already is, with better or lower regulations, maybe cut in taxes. So that is also causing desire to be in the U.S. markets. The Fed is in between. It's not pushing liquidity, but it's not taking out liquidity. So I think India has to offer something where the growth comes back, for people to come back in a market that is looking at other macro trends and not seeing how India is kind of a big winner. So if we get more deregulation, if we get more pro-growth, then the growth excitement can come back. Otherwise, India becomes, it's an interesting market. Short term, it's a good long-term growth story, but there is no compulsion in the short term to come back.
Absolutely. Now, Arvind, another space that I wanted to your view on is when it comes to being a deal breaker or a deal maker, what is it that the budget could carry for the markets and the investors at large?
Well, deal breaker, in my opinion, would be trying to raise taxes to raise more money so that the government can spend more on infrastructure. Obviously, tax collections have been disappointing this year. There's no two ways about it that corporate taxes have really struggled. But raising taxes to then revive growth through government spending, and then maybe increasing some consumer outlays, I think is the wrong way to go about it. I think it's better to put more money in the pockets of consumers. It's more beneficial to give some incentives for businesses to feel more confident. And I think maybe we shouldn't underestimate anything that the government can do on the regulatory side which doesn't cost money, but any big announcement on that front, privatization, deregulation, anything that that is kind of a free market budget. And if they do some announcement, big privatization, it raises money, but it gives idea that the government is going towards a more private sector. And then I'm just throwing out a few ideas out there. I'm not sure which of those make sense, but something that needs to be a little more bold, in my opinion.
Sure. Mr. Sanger, I want to circle back to something that you pointed out, and I want to bring that into a context. You did say that the big theme and the trend that's worldwide important to see is AI. We did see the DeepSeek issue, and some of the stocks even in India reacted despite not being, directly or indirectly linked. I want to really understand from you, one, we have a new president in the US. Two, we are already getting to know that, tariffs are going to be on top of his agenda. Three, we know that the FOMC meeting has come in, and with the hawkishness that they have spoken about, overnight as well. What exactly is it that globally will be important for India and Indian investors to keep in mind? And will the template for investment in markets this time around change from what was earlier?
I think that the thing that is clear is, President Trump is so focused on deficits that tariffs is his preferred tool. India is not at the top of the list, but it still has a trade merchandise deficit. It has a surplus with the US. Fortunately, it has an even bigger surplus on the services side, and that's not an area of focus for Trump. So I think if the Indian government, gives a little bit token benefit of more commitment to buying defense, maybe buying more LNG from the US. These are easy gives for India, and it can escape, hopefully, the tariff incremental, aggressive approach that President Trump likes to take. And so I think that hopefully India is not going to have much of an impact from tariff, which would actually be a positive, because there are other areas, whether it's China or it's Mexico, and surprisingly even Canada, which are being threatened with tariffs, and EU could be. So I think India is in a better position on that front. I think India's real problem is growth and lack of growth. And if the US is showing pro-growth, and China's with this DeepSeek putting its chips on the table on AI, then India has to give something for investors to feel excited. Look, I believe in India as a good, solid, medium to long-term growth story, but the short-term lack of growth is the real reason I think FIIs have gotten a little bit disenchanted with India in the short term.
Okay, lack of growth is something that is a big question, and we'll see whether this budget is really able to spur growth and the economy in the right direction. You did talk about very important points on private capex and on consumption at this point in time. Are there any key sectors that you're looking at right now, Mr. Sanger, which would be on top of the radar of the budget this time around, which would see increased spending? On where do you think valuation comfort still gives you that option of buying in these dips?
I think valuation is starting to get attractive. So, across many sectors, we have seen a sharp pullback. So at this point, we're not necessarily making big sector bets, but we see even in financials, some of the higher quality banks, which are starting to look a little more interesting. I think whether it is capex beneficiaries, or it is other sectors, there is a lot of bottom-up opportunities that are appearing.
All right. Well, thank you so much, Mr. Sanger, for giving us your time. It was a short conversation, but we need to speak to you a lot more. So around the budget, we'll catch you again to see whether the final print has something that will definitely put the economy back on track and get the ball rolling for even the FIIs to look at India once again with a favorable eye. Thank you so much. Appreciate your time as always on Business Today Television with those wonderful insights that you share.
Thank you, Sakshi.
All right, viewers, we'll now wrap it up at that, but do stay tuned. There's a lot more right ahead on budget conversations going in on Business Today Television. Stay tuned.